What do you anticipate will happen to the price of Bitcoin after the 2024 halving? This question is on the minds of many as we approach the new year. The halving event, a key feature of Bitcoin's design, is set to occur yet again in 2024, and it's stirring up quite a buzz. Let's break it down. Bitcoin halving is an event where the reward for mining new blocks is halved, meaning that miners receive 50% fewer Bitcoins for verifying transactions. Historically, these halving events have led to significant price increases. For instance, Bitcoin's price is currently up over 160% year over year. However, it's important to remember that past performance is not indicative of future results. The cryptocurrency market is highly volatile and influenced by many factors. While the future of Bitcoin's price remains uncertain, the anticipation surrounding the 2024 halving is palpable. There are multiple external factors that could influence Bitcoin's price post-halving. Let's dive into a couple of them. First up, we have the expected interest rate cuts by the Federal Reserve in the first half of 2024. Historically, these cuts have led to an uptick in the price of Bitcoin as investors look for alternative assets to park their money. Now imagine the impact of these cuts coinciding with the Bitcoin halving. It's like a double whammy for the cryptocurrency. Next, consider the potential approval of the first US-listed spot Bitcoin exchange-traded funds, or ETFs. This could be a game changer. It's like opening the doors of the Bitcoin market to a whole new group of investors. Institutional and retail investors who may have been hesitant to dip their toes into the cryptocurrency world may now find it easier and more accessible. This increased demand could drive the price of Bitcoin up. But remember, the world of cryptocurrency is a volatile one. While these factors could potentially drive the price up, they could also contribute to price fluctuations. So always invest with caution and do your own research. These external factors coupled with the halving could serve as catalysts for a potential increase in Bitcoin prices. The stock-to-flow model and Bitcoin futures contracts provide interesting insights into Bitcoin's price. Let's start with the stock-to-flow model. This model predicts Bitcoin's price movement based on its supply and flow. It suggests that as the supply of Bitcoin decreases due to events like the halving, and the flow or demand increases, the price of Bitcoin should rise. However, keep in mind that this model is not foolproof. Bitcoin's price is influenced by a multitude of factors beyond supply and demand, including market sentiment and regulatory changes. Now let's move on to Bitcoin futures contracts. These are agreements to buy or sell Bitcoin at a specific price in the future. They can provide leverage for investors, meaning they can control a large amount of Bitcoin with a relatively small amount of capital. This can amplify profits if the price moves in the investor's favor, but it can also amplify losses if the price moves against them. Furthermore, the Bitcoin futures market can also act as an indicator for buying and selling Bitcoin. In conclusion, the stock-to-flow model and Bitcoin futures contracts offer unique ways to predict and leverage Bitcoin's price movements. But remember, with greater potential rewards come greater risks. These tools add another layer of complexity and potential for reward, but also risk in the world of Bitcoin investing. Bitcoin's 2024 halving event is a significant milestone in the crypto world. We've explored its potential impact on Bitcoin's price, diving into the anticipation and speculation that surround such an event. The halving process, which cuts the reward for mining Bitcoin in half, has historically influenced price increases, and many expect the same in 2024. We've also touched on the role of external factors, including interest rate cuts expected by the Federal Reserve in the first half of 2024 and the possibility of the first US-listed spot Bitcoin exchange-traded funds. These developments could potentially serve as catalysts for higher Bitcoin prices, providing easier access for both institutional and retail investors. Furthermore, we've discussed the stock-to-flow model and Bitcoin futures. The stock-to-flow model, a tool used by some investors to predict price movements based on Bitcoin's supply and flow, has its limitations but can offer insights. Bitcoin futures, on the other hand, provide leverage for investors, though they introduce additional risk in an already volatile market. While it's impossible to predict with certainty, the anticipation and potential factors influencing Bitcoin's price after the 2024 halving make this a fascinating time for Bitcoin enthusiasts and investors alike.